Hello everyone, welcome to a new gold strategic video. So this is the New York session gold strategy video which you'll be using only in the New York session. But let me tell you that this is a completely mechanical strategy. That means you don't have to use your head. You just have to follow certain set of rules, and based on that you have to execute your trades. And that's why anybody can use this strategy. Even a 10-year-old kid can use this. That's why these are not very reliable. Yes, if you follow all the rules, you will be profitable at the end of the month. But in the long term, make sure that you learn market structure. Make sure you understand how market moves between POIs and liquidities. Make sure you understand the algorithm which moves the market. That will help you to trade any kind of market, not just gold. You can also trade forex, you can also trade stocks, you can also trade cryptocurrencies. But if you only keep learning mechanical strategies, in that case you have to learn different kind of mechanical strategies for different kind of pairs, right? And that's why you will just keep strategy hopping, and in that way you will never find something reliable which you can hold on to and trade for a long period of time. So that's the reason that I do not really recommend this kind of mechanical strategies. This is only for them who are completely beginners or who do not have time to actually monitor the market. But if you do have time, and if you want to be here for a long term, if you want to make a career out of trading, then make sure you take this seriously, this advice, that do not use this kind of mechanical strategies, do not look for this kind of mechanical strategies, and learn market structure. Now let's talk about this strategy. This is definitely a profitable strategy, and that's the reason I'm discussing this with you. But once again, if you want to be here for long term, then as time goes, make sure you learn market structure, make sure you learn liquidities, POIs, how market moves, what is the intent of the market, and what drives the market. Okay, that will help you. Okay, now let's talk about the strategy. But before I do, if you're watching me for the first time, make sure to hit the subscribe button, give a like to this video for more such strategic videos. And if you want intraday updates in gold and silver, in that case, make sure to join my free Telegram channel. You can find the link below in the description. Now let's talk about the strategy. So it's a very simple strategy. As you can see over here, we have got some rules, but the main rules are the only first 3 points. These are the main rules that you have to follow. And after that, the 4th point is for the entry model. The 5th point is for where to keep the stop loss. And the 6th point is for the target. That's it. So it's a very, very simple strategy. So the first point is you have to mark the London session high and low. By the way, before we talk about the strategy itself, you have to tune your chart with the New York session timing. That's the most important part. So first of all, go at the right hand side below of the trading view. Here you can find the time zone. So make sure you click on it and you click New York session. So now for Indian traders, this is going to be UTC -5. But if you're watching me from some other countries, in that case, this is going to be different. But make sure you focus on the New York session and select New York as the time zone for the chart. Once you do that, now you can go to the indicator section, and here there are many session indicators that you can follow. You can select any of them, doesn't really matter, you can select any of them, and this is going to be the indicators, you can say timing, that will be following for the different session. So the time zone is going to be GMT -5, which is going to correspond with the UTC -5 for me. After that, you'll select the Asian session. I mean, obviously here we have got all the major sessions of the day, but for this strategy you'll be focusing on the London and the New York session. So the Asian session is going to be between 8 p.m. and 12 a.m. Now this is the New York session timing. Then we've got the London session between 2 a.m. and 5 a.m. Once again, New York session timing. And then we've got the New York session, which is from 7 a.m. to 10 a.m. And after that, we have also got the New York PM session or the London close session, which is between 10 a.m. and 12 p.m. Now this is also the New York session timing. So this will be your timings for the indicator for the session. Okay, now let's talk about the strategy itself. So now if I just go to the session and just click it, here you can see that we have got various sessions of the day. So whatever session indicator you use, you will also see this kind of sessions being shown in your chart, where you will see Asian session, London session, New York open, and after that New York close or the London close. Okay, now let's talk about the strategy itself. So the strategy, like I said, is very simple. First of all, you have to mark the London session high and low, right? So let's say this is where the New York session starts. So let's say we have got the London high over here and we have got the London low over here. So I'm going to mark this as London high, LL, and this will be the London high will be LH, and this will be the London low. Okay, so you've got the London high and the London low mark. Now this is the first thing that you have to do. Now you have to make sure that till the New York session starts, the London high and the London low, they stay intact. They should not be taken. Now this is the second point. The London high or the low should not be taken before the New York session starts. What does that mean? That means that let's say the New York session starts over here, but obviously the London is going to close somewhere over here. So there is going to be this gap between the London close and the New York open, right? And between this gap, the London high or the London low should not be taken. That means, let's say the price action over here is something like this. Market comes down, creates the London low, and then market moves here, creates the London high, and then market closes like this. Now this is the New York session opening, this is the London closing, right? Now we have got the London high and the London low. Now we have to wait for the New York session to start, but make sure that before the New York session starts, the London high does not get taken or the London low does not get taken. If they're taken, in that case we are not going to use this strategy. So that's very important. The London high or the London low should not be taken before the New York session opens. Only after the New York session opens, we'll look for a sweep of the high or the low. Okay, so either the low has to be taken or the high has to be taken, but that should happen only after the New York session starts. So this is the New York open. Okay, so only after the New York opens, we will have to see that the London high gets taken or the low gets taken. Between the New York session opening and the London closing, the high or the low should not be taken. This is very important. If this is taken, then we are going to ignore this setup for this day. Okay, so once the New York session opens, let's say that the high or low gets taken after the New York session opens. So once it is taken, now we can use this setup. It's a very simple setup. We can use two entry models. One will be market structure shift in the 1 minute along with fair value gap. So that means what? I hope that you know what a market structure shift is. So let's say this is the London session low. So market comes down after the New York opens and takes the low out, something like this. Market is dropping, takes the London session low. Okay, and once it is taken, market goes back up and gives us a market structure shift. That means that the last high has to be broken. So if it is broken like this, along with what? Along with FVG means fair value gap. So I hope that you know what fair value gap is by now. So we want to see a fair value gap over here. That is very important. If that happens, then you will make your entry from the fair value gap. Stop loss will go below the 1 minute structure low and the target will be the London high. Okay, now here we have got 1:3 for the London high, but let's say the London high is somewhere over here. In that case, our target is not going to be London high. Our target is going to be a mechanical 1:3. Okay, so even though London high is over here, we are going to go for 1:3. Okay, but if the London high is over here and it is giving me 1:5, 1:6, 1:7, then we will be targeting that London high. Okay, we won't go for 1:3. I hope that is clear. Okay, so this is the first entry model where we will be using 1 minute market structure shift. Okay, so this is market structure shift. I hope you understand what it is. The last low comes down, takes out this London low, and then it goes up to break this high. Now this is for buying setup. The same thing can happen in the sell setup. In the sell setup, let's say this is the London high. This is going to be the London high, right? So let me mark it as London high. So the market goes back up, takes out the London high, and the market drops, breaks below the last low, creates fair value gap. So from the fair value gap, we'll take a sell entry. Stop loss will go above this high, and the target is going to be the London low. In this case, this will be the London low, and this will be the high, right? So this is going to be our target. And if market, let's say, is over here, the London low is over here, in that case, we won't target 1:2, whatever it is giving below 1:3. We will target a mechanical 1:3. Okay, this will be our target. So I hope it is clear. It's a very, very simple strategy, very, very simple setup. But yes, it's a profitable setup. But once again, this is only for them who who do not have time to watch the market throughout the day. So only for them you are going to use this setup. But if you have time, then make sure you read the market structure and trade accordingly. Okay. So now let's go and let's watch some examples for the last 1 month. Now here I'm not going to look for the 1 minute market structure shift because I don't have Trading View Premium. So if I go to 1 minute for confirmation, then I cannot see I cannot go for the whole 1 month and do the back testing. So in that case, I'm going to use the 5 minute entry model. So this is the 1 minute entry model that I talked about. The 5 minute entry model is going to be something like this, where we are not going to look for market structure shift. What we want to see is this. So let's say we have got the London low over here, and this is the London high. Now this is the 5 minute entry model that we are talking about. Okay, so we have got the London low over here. So market comes down and market takes out the London low, right? So now I'm going to show you some candles. So let's say we've got the red candle over here. Okay, then we have got another red candle over here, and we have got another red candle over here to sweep out the London low. So now the London low has been taken. Now this is the 5 minute entry model. Okay, this is what? This is the 5 minute entry model that we are talking about. 5 minute entry model. So here what we want to see, we are not going to look for market structure shift. What we want to see is a 5 minute candle that reclaims back above this London low. Okay, now like I said, I'm going to show you this particular entry model because I don't have the premium, so I cannot show you the 1 minute market structure shift. You can do the back testing and see for yourself. Okay, so this is going to be our confirmation, and this will be our entry. Stop loss will go just below this candle, and our target is going to be same as I talked about before. If the London high is over here, then once again we are going to go for 1:3 mechanically, right? But if the London high is somewhere over here, then we are going to go for that target. Okay, so this is the 5 minute entry model where we'll look at the candles, we will wait for market to sweep the low, and then as market reclaims this back with a strong green candle, we'll enter. Stop loss will go below the low, and our target will be either London high or at least a 1:3. Okay, now the same thing will happen for the reversal. Let's say we have got the London high over here. So market goes up. Now these are all going to be green candles, obviously, right? All will be green candles. This one will also be a green candle, and this will be a red candle. So let's say we've got another green candle, and then market takes out this London high and then drops back. So this is going to be our confirmation in the 5 minutes. Entry will be just after the candle closes in the 5 minute. This is the 5 minute entry model, and our stop loss will be above the high of this candle. And the target, like I said, either the London low or at least 1:3. Okay, we'll go for 1:3. If the London low does not give us 1:3 mechanically, then we'll go for 1:3. Okay, so this will be our trade model in the 5 minutes. So I hope it is clear now what we're looking for. What is the setup? It's a very simple setup, as I've told you, and as I've already shown you what the two entry models are, what the stop loss will be, and what the target will be. Now let's go and look for some examples and see how this setup would have played out for the last 1 month. So let's go to the 5 minutes, and as I've already told you that I'm not going to go and show you the 1 minute entry model. I will just focus on the 5 minute entry models. Okay, so let's start from here. So we have got this 16th January. So let's see. So this is the London high, right? This is the London low. But as I've told you that the London high should not be taken before the New York session starts. Here you can see that the London high has already been taken before the New York session starts. So we are not going to use this setup over here. Let's look over here. Here also you can see that London high has been taken before the New York session started. So once again, we are going to ignore this setup. Here you can see that we have got this as the London high, right? So we have got this sweep after the New York session started, and after that market closes back, right? And this is the 5 minute confirmation. So what is this? This is a 5 minute reversal candle, and this is an engulfing candle, right? This is an engulfing candle, and also we want to see that this candle is a strong candle. This should not be something like this, that we have got a very small body over here and there is a huge wick on both directions, not something like this. We want to see a healthy candle, right? We want to see a healthy displacement. So once that happens, then we can go for an entry. So here we can see that this is an engulfing candle. Why? Because this candle's body closed below this buying candle's body, right? So this is indicating that after the sweep, the selling has become strong more than the buyers, and that's why we see this kind of candle. That means that from here market can drop. So once this candle closes in the 5 minute, we have got our confirmation. We can take our entry from here. Stop loss will go above the high of this candle, and our target is going to be 1:3. Why? Because if we keep at the London low, then we are only going to get 1:2, but we don't want that. We want a minimum of 1:3. So this will be your trade setup, right? So you are going to get plus 3R over here if you follow this setup. Now let's go behind. So here also I can see that this was the London high and this was the London low. Market came very close to the London low, but did not take out this London low and went up. Now here also, as I can see, that market took out the high, but there was no closing back. So after that, market just continued to the upside. So there was no trade on this day. Now let's go back further. Let's look at this day. So here I can see that this was the London high, this was the London low, but market did not take out the low. Market expanded, and after taking out the high, also market continued to the upside. So once again, there was no trade setup over here. Let's keep going back. Here we have got the London high and the London low, and here as I can see that market took out the London high first and then market closed back, right? Once again, we see a very strong closing which closed below this previous candle's low, clearly indicating a very strong selling pressure being built once this high was taken. So we can look for an entry once this candle closes. Stop loss will go just above this candle's high. If you want to be on the safe side, you can keep at this high, but it's not necessary because this is the selling pressure candle, right? So this high of the candle should not be taken, because if market goes further to the upside and market takes all the sellers out, which happened on this candle, that means that market has a very less chance that market is going to come down. In that case, market will reverse from here. So you can keep your stop loss just just above this red candle, and your target once again is going to be a mechanical 1:3. Okay, so this will be a trade setup, and once again you would get plus 3R if you have followed this setup. Now let's look for more examples. Here I can see that this was the London high and the London low. Market took out the London low, right? And after that, you can see that market tried to keep going down, but market failed. Market reclaimed this zone back once again. So this would be our entry. Stop loss once again should be just below this candle and not over here. Okay, keep that in mind. The reclamation candle in the 5 minutes, just below this low, we will have our stop loss. And our target is once again going to be a mechanical 1:3. So you could have got it very easily over here, and after that market continued. Let's see for more examples. Over here, as I can see, this was the London low. Market took out this low, and after that what happened? After that market gave a strong candle closing, engulfed the previous candle's body. So this would be our entry over here. Stop loss would be just below this low, and target would be the London session high, which would have given us plus 3.5. But in this trade, market took our stop loss. So this would be a minus 1R. Let's look for more examples. So here I can see that just after the London session closed, market actually took out the London low. So we are not going to look for the setup on this day. Let's look for more examples. Here also, after the London session closed, market took out the high before the New York session started. So no trade. Let's look for more. Here also, market took out the high before the New York started. So no trade. Here I can see that market actually came very, very close. These are actually, I think market actually took out this low. Yes. If you look very closely, then market actually took out this low. So there was a sweep over here, right? Yes. So this is the London session low. In the New York, market came down, just swept the low and gave us a strong candle closing. So this would be our entry with the closing. Stop loss would be just below this low. And according to the structure, the London session high would be our target. So this would have given you plus 7.5R. Okay, so massive trade. So if you follow the strategy, you could have got this amazing trade over here. Let's look for more examples. Here the London session high has been taken before the New York started, so no trade over here. Let's look for more examples. Here once again the London low has been taken before the New York started, so no trade. Here again the London low has been taken beforehand, and before that the high has also been taken, so no trade. Here once again the London high has been taken just after the London closed, so once again no trade. Here I can see that once again the London high has been taken just 5 minutes before the New York session started, or else we could have got a good sell entry. But the rules are rules, so we have to follow them since the market took out the high. So once again no trade. So let's keep going back. Here I can see that the London low has been taken before the New York started over here, just a sweep, and then market pushed up. So once again, no trade setup. Here I can see that I think there was a trade setup over here. So this was the London low, right? And market took out this low. And after that, market closed back up, a strong green candle closing. So we can take our entry from here. Stop loss would be just below this low. And our target is going to be mechanical 1:3, which market would have perfectly given us, right? Let's go back. So, okay, so we have got another example over here where this was the London low. And here we can see that market took out this low. Now, this is a very important example. See what happened over here. Market did reclaim this level back, right? We have a green candle, but before that, this candle, look at this candle. Market tried to break this high, reclaim this low, which was the London low, on this candle itself, but market failed to do so. Market gave a rejection from here and market closed back. And then on the next trying, the buyers came in and pushed higher. But you can see that this reclamation actually failed and market dropped once again to take out this low. So these are very small things that if you observe, whenever this happens, that you have got a low that market has taken and market is trying to climb back, but market has shown a very clear rejection from here, then you should avoid taking this kind of entries, even if in the next candle market reclaims this level back. Okay, so keep this in mind. These are very small things, but let's say even if you missed this small thing and you took an entry from here, stop loss would be just below this candle and your target is going to be this high, so you would have taken a stop loss. But make sure if you use this strategy, then whenever the market is trying to reclaim, it should be able to reclaim in the first attempt. It should not get rejected from that high or from that low. If it gets rejected and in the next candle if it climbs back, you should not take this trade. Make sure you ignore this kind of setup. Okay, but let's say even if you took this, then you would have got a -1 hour over here. Apart from that, let's see if we have got any more entries or not. Here the low has already been taken, so no entry. And here once again the low is taken, so no entry. Yeah, so I don't think that there are any more entries. This is 15 December, so it's been a month. And let's see in a month what is the result that we get. We get one trade, we get two trade, we get how many trades in total? We get 3 trades, we get 4, 5, 6 trades, 7 trades. Okay, that's it. So out of 7 trades, we have got a profit, we have got 2 profits. So these are 3 plus 3 plus 6. 6 plus 3 is 9. We have got 1 loss. So 9 minus 1 is 8. 8 plus 7 is 15. 15 minus 1 here is going to be 14. And 14 plus 3 is going to be 17. So if you risk just 1% of your account, you would have made, using this strategy, plus 17R just in one single month, which is massive. Obviously, every month your returns are not going to be the same, but like I said, if you follow all the rules and keep in mind the small things, then definitely you will be profitable in the long term. But once again, this is a completely mechanical strategy. We are watching the market at a with a very narrow, you can say, standpoint. So these are not very reliable in the longer term. Obviously, if you follow all the rules, you will be making profits. But again, in the longer term, make sure if you want to be here, then you learn market structure, because that will give you an edge in the market. So this is the strategy, and make sure you backtest this before using your own money to trade this strategy. And also you can forward test it to see if this strategy actually works or not.